Hi, and thanks for watching this quick video on why veterans should pay discount points. Now, we get this question all the time here at Low VA Rates. We are one of the national leaders in VA streamline refinances or interest rate reduction refinancing loans, and they're great loans. And veterans are allowed to pay discount points, and almost always we find they do, but they have questions about those discount points along the way. So we're going to talk about that today. What are discount points? Simply put, they are a form of prepaid interest. We're going to talk about that. When you hear someone say, well, you're going to have to pay 1 point or 2 points, 1 point equals 1% of the loan amount. So on a $200,000 loan amount, 1 discount point would be $2,000. On a $100,000 loan amount, 3 discount points would be $3,000. Hopefully that makes sense. Veterans are able to pay points today for lower mortgage payments over the life of the loan. Here's how that kind of should make some sense to you. Let's just assume, for example, you have a $100,000 loan at 4.25% interest. Okay, I should have put a little interest rate right here, and no points. Your monthly mortgage payment will be $492. Now that's just taxes, or that's just principal and interest, no taxes and insurance. It's just your simple mortgage payment. And you will end up paying almost twice as much for your home over that 30-year period. A $100,000 loan will end up costing you $177,000 over the entire term of the loan. However, if you go out and get a 3.25%, I should have put a percentage sign right here, loan, and the lender charges you 2 discount points, you end up paying, or borrowing, I should say, $102,000. So you started out owing more. Your payment, however, is only $444 a month, principal and interest, and over the entire term of the loan, you will have paid just under $160,000. So what does that mean? Well, you pay less each month, $444 compared to $492, and you save over $17,000 in total cost for the house over the term of the loan. So that's why I say it's prepaid interest. If you're going to borrow from the bank, what do you think the bank wants to do? Lend you at 3.25 or lend you at 4.25? The bank would rather lend you at 4.25 because it's a higher interest rate, a better return for the bank. However, if you're going to negotiate, for that matter, a lower interest rate with the bank, these bankers are smart, Wall Street people are smart, then they charge you a premium up front for interest rate by prepaying some of that interest in the form of points. So let's get a little bit further into this. What are some of the pros and cons of paying points? Well, number one, let's talk about the pros. You get a lower rate. You're prepaying your interest, so the bank gives you a lower rate. Lower rate equals lower payment. As we just saw in the prior slide, you're going to have a lower cost for your home over the long haul. Now, it's important that you understand that becomes more and more powerful the longer you stay in the mortgage. Points may be tax deductible. I need to put a big old asterisk right here that says, I'm not a tax advisor. No one at Low VA Rates should be giving you tax advice, and you should consult with your tax professional to determine how and when you can deduct your discount points. Now, this is something that's very unique in my explanation of this. Similar to stock traders who are trading on a margin, I want you to stay tuned for one of those slides. I believe, similar to people that are smart enough to trade stocks on margin, and there are some risk with that in the stock market, you can really harness the power of discount points and get a real big bang for your buck if you use them correctly. Okay? What are some of the cons? Well, simply put, there's more cost up front. We just noticed on that prior slide, $100,000 loan or $102,000 loan. If you pay discount points, you're going to have more costs up front. But really, you got to be scratching your head. There's not nearly as many cons as there are pros, in my opinion. Now, for you to understand this example of the margin account, you need to understand what a margin account is. And it's a type of brokerage account which allows investors, stock traders, stock pickers to purchase stocks or other things, but purchase securities with borrowed funds. So, for example, let's say you put $10,000 into your stock account If you get approved, if you're worthy enough to be able to trade on margin, the company that's holding your money might say, well, even though you've only given us $10,000, we'll go ahead and let you buy stocks or securities as if you had $15,000 or $20,000, depending on how aggressive you got approved for your margin account. Now you're borrowing that money from the stock brokerage. It is risky, however, when you're trading stocks, because if you make the wrong stock pick or your trades go the wrong way, you're going to owe the bank that extra $5,000 or $10,000 that they allowed you to borrow on margin. So, how are discount points like a margin account? Well, on a VA IRRRL or Streamline, veterans can borrow up to 2% in discount points and buy down to a much lower rate. And they don't have to have the cash to do it. Unlike the margin account, you don't have to deposit any cash. Now, you have to get approved for the loan, but essentially the bank's saying, sure, borrow our money and we'll give you a lower interest rate today. Now, by borrowing this money from the bank, you're able to lower your monthly payment, like we showed you, and then you could use this to leverage or trade on margin, if you will, the savings. On that slide 2 back, I think there was like $40 a month in savings. Imagine you take all the savings you get by buying down with somebody else's money, you're borrowing somebody else's money, buying down a lower interest rate, and then what we educate people to do is take that monthly savings and go pay down your credit cards. These credit cards are at 16, 17, 18% and raising. That's how I kind of explain that discount points can be used, if you're smart, like a margin account. The longer you stay in your loan, the more powerful those borrowed points become to you, okay? Unlike stock trading on margin, no one's going to ask you to pay back that money all at one time. You do pay it back as you pay on or off the loan, okay? So as you pay your balance down because you borrowed more up front, you ultimately will give the bank that money back in one way, shape, or form, but you don't have near the risk that you would on trading on a margin account. Now, this is an example that not a lot of people use, but I really like to use the example solely to drive home the idea that you can take the savings, the monthly savings, that you would otherwise not have if you weren't able to borrow these discount points, and you can go attack some much higher interest rate loans or credit cards or debts and obligations you have. And through that leverage, through that intelligent leverage, you can get yourself out of debt much quicker. Now, when should you pay discount points? When the lowest payment possible is the most important factor. We have people call us up all the time, and they're in a situation where if they don't pay points, maybe on their Streamline refinance, they're going to save $50 a month. But by paying points, we can get them to $85 a month in savings, or from $200 to $300 a month of savings. And they have a decision to make. You, if you're listening, have a decision to make. How important is the absolute lowest possible payment to me? And if it is important, then you should really consider paying discount points. I believe it makes the most sense to pay points on an interest rate reduction refinance loan or an IRRRL or Streamline than any other type of loan. If you're doing a cash out loan, you don't need, nor should you pay discount points most of the time, because that additional money you're borrowing, if you don't pay discount points, then you can just use that additional money to pay off credit cards, pay off debt, or get other cash, okay? And even on a purchase, for example, you might want to pay some discount points on a purchase, but we don't see that often because most people on a purchase, unless they can get the seller to cover their discount points, are trying on a VA loan to come in with as little cash out of pocket as possible. Now, you should also look to pay discount points when you have no intention of selling your house anytime soon. Imagine if you borrowed an extra $3,000 or $4,000 in discount points, that gets tacked onto your balance, and then 6 months later you sold your house. There are situations where maybe that would make sense if that lowest possible payment in the short term was absolutely important to you. But if you are thinking of selling sometime in the near future, you might do a cost-benefit analysis with your loan officer. Now, it's also better to pay discount points, in my opinion, when you have a market like we have right now in the United States. I was just in our break room here at work today, and there was an episode on CNN or Bloomberg or something about how in many parts of the country, home values are now higher, in some cases 30% higher than they were prior to the housing and real estate collapse. So home values are on their way up. You're not going to have as much expense, so to speak, if you're rolling discount points into your loan in a market where your property value is just rising quickly. And right now that's happening. So when should you not pay points? Well, just the opposite. If you plan on selling in the near future, in the near term, it's probably not worth paying discount points. Or if you're in a situation where you don't need to save the most possible money each month, and you don't have much high interest rate or credit card debt to pay off. Those are some situations when you may not want to pay discount points. So I thank you for watching. If you're considering paying discount points and you're struggling to determine whether or not you should, I hope this slide presentation helped you. You're not alone. It's one of those things that a lot of people try to consider and weigh the options. We see a lot of benefit in paying discount points, but it's your choice. As a veteran, you choose, no pressure. It's up to you. If you don't want to pay points, you're simply going to be given a higher interest rate today than you otherwise would. Thank you.